Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video. We're going to be talking about something interesting that's taking place in the hog market right now. People say, well, hogs, what the hell? Why are you talking about this market? Because the market hit limit down, and I think it's an interesting topic to talk about because it's not something you're going to see in other markets, right? Not all markets have daily price limits. A lot of the stock indices they have circuit breakers, but when a market hits limit down, it's interesting. Okay, so that's why I want to talk about it. But before I jump in, remember, if you're enjoying my videos, be sure to subscribe to the channel, click the notification bell so you don't miss any new uploads. And if you find today's video helpful, be sure to hit that like button for me and leave a comment sharing your biggest takeaway. I love hearing your feedback, and your support really does go a long way in giving me the motivation and encouragement to make more videos. All right, so let's get started with today's topic. All right, so hogs, HE, right, is the symbol. People will say, why do you want to talk about hogs? Well, there are some traders that you do use Orderflow, my software specifically, to trade the agricultural markets, right? I know they trade the grains, and there's a few that actually trade the hogs, okay? But today we sort of got into a special situation when the market hit limit down, right? What does limit down look like? It looks like this, right? You don't see anything trading on the bid. You'd have to look at a dome, right, to see what the size is of what is called the pool, right, the limit offer. So you can see 71.77 is 1,519 contracts. So there's 1,519 contracts trying to be sold at limit offer. Now, people say, well, I see a bid here, 172 at 71.75. Yeah, but you cannot trade it. The daily price limit, the most that the market could move in hogs, is 3.75, which is just about 5%. Okay, so yesterday, go back, right? Yesterday we closed up here at 75, about 47, and today we opened up at 73.55, and our daily limit is down there at 71.77, right? Which is just what's going on here? Right down here, right? 71.77, right here, right? This is our daily limit. So we open up, we're already down about 2%, get down to about 3%, and this is where knowing if you're trading this market or certain markets. Now, if you want to know what markets have daily price limits, just go look on the CME website. Okay, CME website, a lot of information. So if you're trading, some of the grains, it's good to know which markets, what their daily price limit is. And you can see here, lean hogs, it's 0.037. There's a 5 there, but traders don't really talk about that 5 because you just deal with that. You cut it off there at 7. But cattle also. Okay, if you were to look at the contract specs here, okay, so a few years ago, they changed it to a financially, the contract, they sort of changed it a bit, made it financially settled as opposed to physically delivered. But I don't know if they have it here on what it says, where their daily limit is here. No, I'm surprised. They used to have it also on the contract specs. But you can see here, like, here, price limits. Okay, so it just takes you to that page. Okay, but again, you don't see things like equity indices on here or currencies. They don't have those daily limits that you have. These are hard limits, right? So once it hits that limit, like if it was, soybean meal, $30, if once it moves there, it can't trade beyond that level. Okay, and it's important to note that when a market hits limit up, limit down, obviously there's going to be usually the next day it will continue. Now, when traders they think that the market closes when it hits limit down, it's not, right? What you have is it's hit limit offer in this case. I say limit down, it's basically limit offer. It's offered out at this price, right? Now there's almost 2,000 contracts there. You see, earlier it was like 1,500, 1,600. Now it's up to 1,900. We're coming into the close soon. but you just can't sell below this level. So if you wanted to sell, you got two choices. One, join the offer at limit down. If someone comes in, buys, clears out everything in front of you, you could get filled. Okay, chances of that happening late in the day, probably not that high, because there was a few moments here, right? We hit that limit down right here, bounced up a little bit a couple minutes later. Then about 15 minutes later, did get a little bounce here, but that was it. It was just everyone coming in, joining the offer, joining the offer, joining the offer. Okay, but the market is still open for trading. It's not closed, as some people would have you believe. You just can't sell anything. You can buy all you want. Okay, and then, this triggered me a while back over the summer. I was just driving in my car, randomly listening to some YouTube videos, and someone had talking about the market being limit down, and looking at the order flow, you can't see any buying or selling. It's useless. Well, yeah, the market's limit down. All you have is selling pressure, right? I mean, all this is just insane selling pressure. That's why the market is limit down. There's 1,900 contracts on the offer here, okay? And they say, well, you can't see any buying pressure. Well, no shit. Nobody wants to buy it when it's limit down. There is some trading going on here. I mean, you can see 1, 2, I don't know what that is. Maybe it's just somebody that was short from earlier. Maybe they want to just, say, I'll just cover it here now, go into the weekend flat, or spreads, because you can see here, right, there is limits on spreads. You can trade calendar spreads. So you can do, for example, this is the December hogs, right? You can see there's all these listed contracts, right? There's Feb, April, May, June, July, August, October, December. Maybe you do a calendar spread, Dece calendar spread, or Dece June, or Dece Feb, or something, because there are markets out there, right? Those spreads have wider daily limits, so you can still do a spread, and oftentimes that's what grain traders will do, right? If in the grains, right, they hit limit down, well, obviously they can go to the cash market and participate in the cash market, because when grains in the past would hit limit down, a lot of traders would just go to the physical market, okay, and trade that way. So that's how traders would understand, where are we going to be tomorrow, is by where, if market is limit down here, saying, asking their farmer friends, where's the cash market on hogs right now? Well, let's say it's about $70. Okay, so yeah, we still probably got a capacity for this market to go lower. Now, you and I, we don't have farmer friends that we can call up and get that information from, but the guys that trade this market for a living, they do have those people they could call up. But again, the markets with daily limits, right? It's kind of limited, no pun intended. But again, soybeans, bean oil, meal, crush, that trades separately as a soybean crush spread. Soybeans against oil and meal. Rice, oats, not, hardly anybody trades that. Cattle, Kansas City wheat, Chicago wheat as well. It's got daily limits. Butter and cheese, but it's not just it. But if you're trading, some of these commodities, do understand that there's price limits, and if you see the market, if you come in to the trading day, I mean, obviously, if you're specializing in these markets, you should know where the daily limits are. But if you're coming into the day and you just see the market down so much, you got to understand where's the limit, because the worst thing you want to be doing, right, if you're unaware that the daily price limit is down here, and you're thinking, for whatever reason, oh my gosh, maybe I should be buying it right here. Okay. Well, you're buying it awfully close to the low of the day. I mean, the daily price limit. And if you do that, maybe you're looking for a big move up. But if you're doing that, and if you're buying it in here around 71.90, thinking, oh, I got some nice supportive buying or whatever, who cares what the reason is? But the point is, if you got to turn and get out of this thing, and you're just right here at limit down, and you're like, you know what, I'm wrong, you might not be able to get out. Okay, at least today, maybe, you know, the next day when the market opens up, you know, 2% lower, you could get out or something. But just bear that in your mind, right? If you're trading one of those commodity markets that do have a daily price limit, and if you're trading dangerously close to the daily price limit, it's probably, you know, there's a reason why the market is down almost 5%, right? Do you want to be a hero and try to buy it off of down 5%? No, you know, I don't think that's a prudent trade to take, because if you're wrong, your margin for error to get out, I don't want to say it's small, it's actually big, because you're not going to be able to get out, right? Because look, imagine you buy it, you know, you're buying it down in here. Oh, look at the, you know, big buyers came in here for whatever reason. You're like, I'm going to get long. And if you're wrong and you got to get out, and you try to get out, and someone just whacks it here, limit down, and then it goes limit offered, boom. Next thing you know, there's 1,000 in front of you trying to sell also at limit down. You're screwed. Okay, so I hope that sort of clears up, you know, again, some of the misconception of a limit move taking place in the market, right? The market is still open for trading until it closes for the day, because it could come off limit. Some big buyer could come in, and, you know, China could come in and say, oh, you know, hey, you know what, we're going to buy it for, you know, because it's hogs, you know, we need pork, lift everything. Chances of that is pretty small, but the market is still open for trading until it closes for the day. It'll just close down, limit down. It's still open. You could buy all you want. You just can't sell. You could try to sell. You could join the offer, but chances of getting filled is not going to happen. All right. So again, you know, this is not a video that applies to everybody, because most people stick with the main markets, you know, the currencies, the equity indices, interest rates, that they're not in the grains or the meats. But if you are in the meats, you know, or you're thinking about it, just be aware of that, okay? Because that is something that can happen. And, you know, I've seen traders, you know, years ago get caught in limit moves that lasted for several days against them, right? It's margin call, margin call, margin call, because they can't get out, okay? So you don't want to be in that position. All right, guys, I'll end that video here on that note. You know, be sure to subscribe to the channel if you haven't. You know, this one didn't really talk a lot about order flow, but it sort of talked about market conditions, okay, and you know, things that are important to know about markets. So I'll catch you guys on the next video. Take care.